It was recently announced that Daimler, i.e. Mercedes-Benz, was going to increase its holding in Aston Martin to 20% by 2023. Let's have a look at what this means for both of these companies and how the market has responded. Now, I have a background in finance, having a PhD in finance, and having published several peer-reviewed articles on mergers and acquisitions. So I have an understanding about how the market might respond to M&A announcements, and hence how this might be impacting what is happening with Mercedes-Benz and with Aston Martin. However, if you have any thoughts about this, drop those in the comments below. Otherwise, it would be brilliant if you like this video, share the video, and subscribe to the channel. Okay, so what's the basic background behind this transaction? Well, essentially Aston Martin hasn't been doing particularly well. It did its IPO, and the share price has not done well afterwards. In any case, Aston Martin needs money. Hence why it decided to go down this route and effectively raise money from Mercedes-Benz or Daimler, whichever name you want to assign to them. So they basically wanted to raise money in order to recapitalize. And they did this by effectively selling shares to Daimler. Daimler, of course, already had an existing partnership with Aston Martin. The existing partnership involved some technology sharing, which has been going on for quite some time. However, the technology sharing has often not been particularly great for Aston Martin, because Aston Martin would often get slightly dated technology. Therefore, the hope is that with this additional tie-up, they'd get more modern technology and particularly access to things like hybrid or electronic engines and access to better infotainment systems than they'd had in the past. Because oftentimes Aston Martin had been lagging Mercedes in terms of that type of technology. So with this tie-up, they get access to better technology. Notably, a lot of the technology in Aston Martins had been from Mercedes, including things like the engine, but also including things like the infotainment systems, which, like I said, had often lagged those in Mercedes-Benz. So the underlying hope would be to get those to be more modern, and then to help to improve sales in Aston Martin by modernizing the technology and hopefully improving Aston Martin's position. Furthermore, the additional cash would help to shore up Aston Martin's balance sheet so that it would be less likely to go bankrupt. That's the basic logic behind it. And we can see how the market responded. So it appears that the initial view of the transaction was quite positive for Aston Martin. Essentially, the share price initially shot up. There was effectively this price gap between the close of trade and on one day and the open of trade on the next day, a significant price increase of roughly 18%. However, throughout the course of the next day, the share price declined back to almost where it was. So the question is, does this mean the transaction is bad for Aston Martin, or could other news have come out? Well, it turns out other news did in fact come out, and that other news was not great. The other news basically pertains to the Q3 figures for Aston Martin. Effectively, Aston Martin went into a loss as compared to a profit in the same quarter last year, i.e. a significant worsening. Revenues had essentially halved, so therefore Aston Martin was doing quite terribly. And this is effectively notwithstanding some new-ish cars already being on the market that you would have thought would ordinarily have buoyed the performance of Aston Martin. Essentially, their sales and profit figures were not good, hence why the market might have responded quite terribly. And notably, those sales and profit figures came out effectively at the same time as this tie-up transaction was announced. I.e., you have this tie-up transaction being announced, and then effectively contemporaneous with this, we have the negative news. It appears that that negative news offset the positive impact of the recapitalization from Daimler Group. Put differently, the recapitalization seems to have generated a positive reaction, and that appears to have been a short-term spike that was then attenuated by the additional negative news. Hence why we end up with that result. The next issue is, how has Mercedes-Benz or Daimler's share price responded to this? And again, it's a little bit opaque. The reason I say this is Daimler did actually see its share price decline, and declined by around 6% at this same time. Daimler's profit figures for Q3 had come out actually around the 23rd of October, so a few days prior to this. So the market does not appear to have been responding to Daimler's specific profit figures, because those were already priced in. Rather, the only real new news here is the tie-up or transaction with Aston Martin. As a result, it appears that that was what was shifting Daimler's price. So the question is that negative reaction either A, symptomatic of this deal, and or B, what we'd expect? And the two to some extent are not totally separable. So oftentimes when an acquirer does an acquisition of a publicly listed target, the market doesn't respond super positively. Often it's not a tanking to the degree of 6%, but still not super positively. So compared to what you would ordinarily expect, Daimler has done worse than what you would ordinarily expect from this type of recapitalization transaction, particularly if Daimler is acquiring shares. What this negative reaction implies is probably a couple of things, and they're not necessarily mutually exclusive. Either A, Daimler overpaid for the shares that it's getting, which is quite possible, and or B, the market thinks in addition to that overpayment, it reacted negatively to Aston Martin's share price, and then this negative impact for Aston Martin then filtered through to Daimler, because Daimler's now going to be owning 20% by 2023. Put differently, because Daimler now owns shares in a company that doesn't seem to be doing as well, the market responded negatively. It would respond negatively for a couple of reasons. Firstly, the Aston Martin shares that it's buying, the market now views as being worth less than would be ideal. Secondly, the decision to make this transaction sends negative information about the corporate governance at Daimler, and the market is now viewing the corporate management of Daimler more negatively than it was before the transaction. Hence the market decline. In any case, the market did not respond positively, suggesting that from Daimler's perspective, this is not particularly helpful. And we can see this to some extent. You can see that Daimler is not directly gaining anything from this tie-up, i.e. Daimler's not getting technology from this, because Daimler is really leading the technology here. Rather, the hope is that by Daimler getting involved with Aston Martin, it is able to increase Aston Martin's performance, and then this will help Daimler because Daimler will own more shares in it. That's the basic logic. But if Aston Martin isn't doing well, then that to some extent undermines some of the benefits for Daimler. Now, to some extent, the market might have slightly overreacted here. We always need to be cautious when looking at the performance on just one share. And it's possible that the market was putting too much emphasis on the short-term share price as compared to the long-term benefits. That said, Daimler is going to have to do this over an extended period of time. And the technology that Daimler will give to Aston Martin isn't going to reverse Aston Martin's fortune next year or the year after. It's going to be more long-dated. This is because you can't just go around and change your whole car lineup on a whim. You can't turn on a dime and introduce a new model just because there's new technology on the shelf. These things take years to develop. So any benefit to Daimler is going to be potentially years down the track. Hence why the market might not be super positive about this transaction, because any benefits to Daimler are long-term and potentially a little bit too ephemeral, and only coming through the share price increment that Aston Martin might receive, which itself is uncertain. So in any case, Daimler appears to be gaining relatively less from this. This appears to be positive news for Aston Martin, but the market didn't respond super well because the results that were released on the same day were also quite negative. And there was a confounding effect that perhaps made it more difficult for us to interpret whether this transaction had created value for Aston Martin. In any case, those are my views on the underlying ethos behind it. The goal was to give more technology to Aston Martin to recapitalize, and then hopefully Aston Martin would perform better, which, because Daimler would own shares in the deal, or shares in Aston Martin rather, would help Daimler by virtue of the value of those shares. That's effectively the underlying logic. In any case, those are my views on the transaction. If you have any views on it, drop those in the comments below. Otherwise, it would be brilliant if you liked this video. If you really liked it, it would be great if you share it. And otherwise, it would be wonderful if you subscribe to the channel. Well, thanks so much for listening in, and I very much hope to see you for future videos. Bye.